Morning all, how are we doing? Morning ladder, morning Jarmont. All good. Happy Friday. Happy Friday, fabulous traders. Somebody's woken up in a good mood this morning. I shan't be in a good mood this morning until Euro New Zealand decides to absolutely collapse. God, that thing's doing my head in. Oh, unbelievable. Anywho, I'm discovering, I don't know why, but Euro New Zealand is negatively correlated with the DAX and the US dollar at the moment. Every single time we get a push on the US dollar or we get a drop on the DAX, we get a push on Euro New Zealand. So somehow it's fallen into correlation, negative correlation with my other positions, which isn't a bad thing. But what it's meaning is every single aggressive drawdown control I attempt on Euro New Zealand to get stopped out on, I'm making profit on the others, which is fine. But all it's ending up doing is wiping out my profits with my aggressive drawdown control. So anywho, so yeah, yesterday basically, scratch basically, it's $70, it's pretty much break even. Mainly down to, again, aggressive drawdown control on Euro New Zealand. So closed out the US dollar CAD, we've got to a bigger time frame. Closed out that US dollar CAD. I'm flat that now. I've taken the EA off. After this push, I didn't want to push it, but that's a nice trade. Considering this push is extended up here, and I took a long, which I never do. I did, and it worked. But it's pushing again this morning, but I'm not going to. It needs a rest. It's got to have a profit take at some point, so I'm out of that. DAX closed one there, M15, be able to see that. Closed that one out yesterday. Nice drop on the DAX. That was yesterday as well. That was a scratch. Pound New Zealand, nice short, put a trading stop on that. I've still got one on that, which is nicely in profit now. And that's Euro New Zealand as well. So all of that profit, lovely, but all completely wiped out by all these aggressive drawdown control positions. All of them losers. I've never had so many. I can't recall a time I've had so many aggressive drawdown control positions as losers. It's driving me up the wall, this thing. It just will. I've had one on, that worked out nicely. But it didn't get me far enough to bank profit. Had these failures the week before, the day before, that one overnight, and then yesterday I had these losers. I just can't get an aggressive position on that holds at the moment on this thing. So I've added another one this morning. I literally just need this drop. That's all I want. It's not giving up the ghost though. Euro's really off the scale at the moment. Not badly though. These types of squeezes are the most horrible. I don't mind if something's going to go ballistic. Fine, go ballistic. I'm wrong on it. That's no problem. But if you go ballistic, the elastic band gets stretched, and that ballistic move will create an elastic band effect where you get a profit take move. What doesn't create that profit take move is this kind of movement where you are so gradually grinding over weeks. There's no extension or stretch to create that fast snapback. That's why I'm finding this so difficult to get anything aggressive on, because we're not getting extended. We're kind of touching on being embedded all the time, but we're not actually moving fast. That's what's doing it. These are the most horrible positions to be in. It will come down at some point, but we need a news catalyst. And what I'm wanting this afternoon, ideally, is negative Michigan sentiment, so that we get a drop in the US. If we get a drop in the US, we'll get a pump on the indices, and that will probably, this seems to be inverse to the US dollar, so that will probably drop the Euro New Zealand. But anyway, it's one of those things. Morning Alan, morning Themba, morning Jane, morning Alex, morning Trevor. Morning all. 30th anniversary of Black Wednesday when the pound fell out of the ECU. Oh my God. Probably going to happen today then. We've got a lot of options expiries happening as well, so we might have a big volatile day today. Hopefully unwrapping everything they've done over the last week. Watching pound come down after the negative news. Yep, that's good. So pound New Zealand's going nicely into profit for me. Negative retail this morning on the pound. Not just negative, really negative. We missed the target by 1.1%, which is a biggie. So yeah, really bad retail. It's not it's orange news, but even orange news when it's that bad is a little bit of a mover. So yeah, more negative there. Only news we've got today is University of Michigan. So that's 3 o'clock this afternoon, half an hour after market open. Very, very, very hit and miss UOM. It's just 500 people surveyed, and it's for some reason the banks use it as a leading indicator. I've never understood why, but it is part of the scorecarding system, and I don't know why, but anyway, they do. And they pay attention to these 500 students. They're obviously very, very brainy students. Morning, Jeff. The end coming my way soon. Yeah, bloody hope so. Themba, hi all. Am I the only one who can't see my screen properly? Yes, I think so. Everything seems fine my end. I'm here. So that's all news there. Sorry, I'll look at that one in a minute. Core retail, overnight, not a lot overnight. Bit of Chinese news. Yeah, that's, we know we've got to talk about that. There was something yesterday as well, late in the day. Well, late in the afternoon from Russia, which is worrying. Where's it gone? There. Russian Foreign Ministry spokeswoman, if Washington decides to supply Kiev with long-range missiles, it will cross the red line and become party to conflict. So basically, that's Russia laying down, do not supply in any shape or form any long-range missiles, America. And if America do, it's a declaration of war, in effect. They're party to the conflict. So that was a no holds barred, off you go, don't get involved. They're losing, obviously, and they're not interested in anybody getting involved. So just a little bit more escalation on that, which adds a little bit more fear into the market. The fear and greed just went past, I think, didn't it? Yeah. So that adds a little bit more fear into the market. We go into a little bit more risk off. So everything starts to move. Money will tend to pump into US dollar a bit more, which it did yesterday. ECB deposit 200 basis points to 2.75 by July. That's miles away. Yes. It was blurry. It was blurry, was it? Things all right now. It's 1080, so not quite sure why, but anyway. Right. Sorry, Mr. Allen, what did you say? Ian coming away soon? No. Euro New Zealand has been bullish since 16,250. Yeah. Yeah. Yeah, well, it's been bullish since before that, really. It started getting bullish down here. We had a reversal at 1.6. We retested and made a new high. So that, to me, that candle there really is where we potentially entered a bullish move. But it looked like it was getting that bounce, which is why I took the reversal at that resistance, basically, initially. But obviously, it's pumped on the Euro news. So market, it's not if you look at the other euro pairs, euro odd is very similar to euro New Zealand, so discount that one. But if you look at the other euro pairs against the CAD, it's not made as much, anywhere near as much progress. Swissy, it's down. Pound, it's up against because the pound's weak as hell. Yen, obviously, it's making grounds against the yen. But you look at the others, it's not, the euro isn't particularly strong. At the moment, we've just got this weird, the whole Asian sector is weak. The yen is weak, the New Zealand's weak, and the Aussie's weak. And that's giving the euro, with this little bit of strength it's got off the rate increase, that little bit extra power it needs just to boulder past. And that's why we're seeing this very gradual move. You know, it's not a fast move. Normally when you get interest rates, like inflation figures dropping and interest rates going up, you see these large, fast moves like we had on the US dollar. That's typically what you expect to see, a big pump, which tends to get a pullback. But that's not what we're getting. We're getting a slow grind, and slow grinds are awful. They will eventually come to an end. You know, we had a slow grind down. Usually finishes with a flurry and a pullback. So yeah, just waiting really. Just a squeeze, one of these squeezes, just you get them. Nothing you can do. Right, so past the evaluation yesterday, other news with E8. So for those who don't know, Eurozone CPI at 10 a.m. Sorry, I'm just reading the comments. They class that as yellow. Well, no, that's yellow. I've got a feeling that is probably low impact because it's made up, the majority of that, by German CPI, which you will have we had that? Good point, worth watching that. It might be next week. Where are we? I'm in the wrong week, am I? Sorry. What's the date? 16th. Right, 19th. This is next week. CAD. US dollar FOMC. Swiss S&P. No, I don't know. I don't honestly know why that is. The PMIs, see, they normally concentrate with the Eurozone. They normally concentrate on Germany and France. So I think probably the Eurozone CPI is less important because there is an awful lot of players in Europe which have very little impact on economy. Germany and France do because they're the big economies. So I think that's probably why that one is a yellow. But yeah, 10 o'clock, it's worth having a look. We might get some activity. They've marked it as red, obviously, in Financial Juice. Yeah, we'll see. Kazakhstan, that's where Borat's from. Kazakhstan. UK public holiday. UK public finally looking after their finances with energy costs rising so sharply they are having to save rather than spend. Yes. Right. Okay. So, yeah, other news yesterday. I passed the E8 evaluation. So, for those who weren't here, I started the evaluation on, where are we? Friday, Tuesday. So, Tuesday, I took phase 1 of the evaluation and passed it in one day. Wednesday, I started phase 2 of the evaluation, went into drawdown by $800 and had to stop because there's a $900 max. Pound, sorry. I'm trading a pound account, not a dollar account. Thursday, yesterday, I took one trade short and passed the evaluation yesterday morning, phase 2. Got funded within 2 hours. Very impressed with E8. Yeah, got funded within 2 hours and got the live account. So I took 3 trades yesterday on the live account and made $1,300 off those 3 trades. Just scalped short on the Dow and the DAX yesterday. So I have £1,000, sorry. This is a pound account. I went for a pound account. The other thing I like about EA is I can actually trade in my own currency rather than being forced to trade in dollars everywhere else. So all the other prop firms force me to trade in dollars. I like trading in pounds because it means more. But yeah, so I got £1,000 in there and I got to wait 7 days. So what I'm planning to do, I'm still going to trade the account, but I'm going to, it's this one, I'm going to take very small risks. So what I'm going to be doing is moving forward is just taking 0.25% risks on very small trades, just to keep trading the account basically, to keep my hand and my eye in. But I want to get to payout stage basically, so that I can test their payout and make sure they are legit. I'm 99% sure they are. Yeah, so that's the plan, is to just trade this for 7 days, so next week and into the week after, and then get a withdrawal. So I've just got to stop being stupid, make sure I'm not stupid, because the problem with these accounts is this daily loss limit, which you don't have on my Forex funds and some of the others. You have a overall account loss, which moves up to your initial balance, which in this case is 18k I've got funded with. So if I went up to 22k, I've actually got 4k of drawdown. With these guys, you have got to stay within this 900, which is why on that Wednesday on the phase 2, I had to stop trading because I got to $850 in drawdown. So I had to stop for the day and then start again the next day. And then I made $2,000 back the next day. I went way over target. Target was $900 and I did 1,250. I didn't realize I went way over target. But anyway, so yeah, as far as process goes with these guys, very impressed so far. As soon as you sign up, you get your login details immediately. As soon as you pass phase 1, when you close that trade that passes within 5 minutes, you've got an email saying congratulations, and then here's your next logins. You start phase 2. You can pass these in 1 day. That's the beauty of EA over the other firms, is there is no minimum trading days. So I passed evaluation. You can do it in a day. Yeah. So if you pass phase 1 in the morning, pass phase 2 in the afternoon, you can be funded that day. Yeah. If you literally hit short with 10 lots on the DAX and the DAX goes down, you close that trade. Within 5 minutes, you'll be on phase 2. Hit short on the DAX with a 10 lot short. As long as it goes straight down, you'll pass phase 2. You'll be funded within an hour, with immediate. Signed the contract within 2 hours. I had the account, so really good. But it's the only prop firm out there that I'm aware of where it has no minimums trading days. Everybody else, my Forex funds is 5. Most of them are 10. Some of them more. So anyway, I'll update you on that as and when. I'm not going to go mad on it. Come on, Euro New Zealand. Let's make today the day, shall we? Right, down on the DAX this morning. I'm trailing one position, this position here. I'm in profit overall on the whole position at the moment. I'm always short in the DAX. Yeah, this one's got a trailer on it at the moment. I'm trailing it with 35 pips because we've got this big gap this morning. Quite a big gap formed this morning. We've got 110 pip gap, which is verging on half an ADR, just under half an ADR gap. So it's a big one. Gaps get filled, as we know. Typically, the market will always come back and try and fill gaps because these are imbalances in the market, which need to be rectified. Sometimes we don't fill them there, and especially when we're in a bear market like this, when it's such a strong bear market, there is a chance that we won't fill those gaps because the gaps are formed by vast selling pressure. So especially when it's a gap to the upside, when we've pushed up, we've gapped up, very high probability of that gap getting filled in a bear market. When we've gapped down, the market's got to rally hard to get back to that gap. And when you've got so much selling pressure, it could well get orphaned and left behind. So we'll see what happens today. But that's a biggie for the DAX. It's a very big gap. We don't normally get them quite that big. But, look what happened there when we got that gap down. We flushed. Big star. So today could be a big down day. So but basically sell the pullbacks, I suggest today. But we are also on a 3 down day, which we tend to, after 3 down days, get some kind of profit taking move because stocks are cheap. So people will start buying up when they buy up. People that are short will see an opportunity to get out of their positions and they will become buyers to get out of their shorts. And we get that move back up started. So one of those two is going to play out today. We could have a drop, gap fill. We could have a down day. Don't know. But at the moment, we're very heavy. But I'm just going to get out of that at the minute. And then obviously, if we do push up, I'll add back on. But I need to get some profit in the bank because if Euro New Zealand doesn't play ball today, I'm going to have to do a bit more DD control. But anywho, that's my mess for me to worry about. ADRs so far today, none. All the weeklies, obviously, we've got the weeklies have got bigger because of the pushes on the US dollar. So the US dollar weeklies that we've had are mainly, obviously, these have been everything that's US dollar crossed has hit its weekly range, as you would expect on the CPI figures, and it's pushed again. So we need to be aware of this propulsion gap. They do get orphaned on fundamental news, but it is also reliant on future news. We've got FOMC next week. They could undo this whole thing and put a load of unconfidence into the US dollar next week. So we need to be very aware of what's going on with future news. So FOMC next Wednesday. It's a really, really, really big week next week. That's the wrong week. No, it's not. Wednesday. Where are we? There. Yeah, so big week next week. We've got CPI for the CAD. We've got the Aussie monetary policy. We've got FOMC and the rates. We've got the FOMC press conference. We've got a monetary policy from Japan. We've got the Swiss bank national rate. We've got the monetary policy in the UK rate. It's just a monster week next week. So Tuesday through to Friday, volatility all over the place. So hence, I'm really, really hoping I can get as flat as I can before next week, because we're going to have a big one. So I'm looking for some scalping opportunities next week if possible. But those are the weeklies. You can't really play. You can play the weeklies, obviously. These, especially these USs, they are very extended. But you are trading against the fundamentals with the US at the minute. So I'm more interested in buying at the minute. So a lot of these you'll find are going to be quite difficult to get into. RSIs, we've got a few that have hit now. I'm going to go through all the pairs this morning quickly. But CAD Swiss, we broke that low very, very easily yesterday. So we had that big drop down yesterday, which broke that low. So we were looking at this double bottom potentially as a double bottom bounce. Let me just switch back to H4. Yeah, so we were looking at this double bottom bounce. We were extended and embedded. And, I said, if you're going to take it, just be aware that there is every likelihood that's going to come down, which it has, unfortunately, if you did take it. But if you did take it, you are very, very extended and into your second position now. So we've obviously moved down. We've got divergence on the RSI now. That's not very well drawn, is it? It is an upward slope. So yeah, we've got some bullish divergence forming on the CAD Swiss. Oil basically had another drop based on, this, it looks like it's in a downtrend really badly, doesn't it, at the moment? I really still don't understand why oil is losing its value quite so much with the supply demand issues we've got. But that isn't helping the CAD Swiss. because obviously Canadian dollar rallies a lot on oil, and we're not getting that at the minute. Liquidity grab on the CAD Swiss, it could be. So with higher time frames, when you get a liquidity grab on higher time frames, a lot of the people entering on higher time frames are longer term players. So they're your daily, weekly, entering on 4-hour type traders. So they're long-term swing traders and position traders. They will have stops under the lows, but they don't put stops under the lows like we do on M5. They put stops under the lows somewhere, expecting there to be a second attempt at that and a liquidity grab, because there'll be limit orders sitting there waiting to get in. So I usually look for half an ADR. We had what, 130? Is that? No, that's 3. Sorry. 56 ADR. All right. Is that all CAD Swiss is 56? Yeah, well, that's definitely, that's swept, completely swept. No, hang on, 50, yeah. So, it's difficult to tell, isn't it, with that? I would say that could be a liquidity grab. Is that really all ADR? No. When did that drop so much? I haven't been paying attention to CAD Swiss. Mainly because it's been going sideways, so I've not really had any attention. You know, it hasn't been brought to my attention really as a trading opportunity for ages. So, yeah, that could be a liquidity grab very easily. We need to break back above there, and you know, that's the speculative part of trading, isn't it? You will get in now on the next reversal alert on M15. I would, which will be there. I'd take that long. Quite like it. So yeah, CAD Swiss very nicely extended on the 4-hour to the downside, but you are trading counter trend at the moment on that one, so just be careful. Euro New Zealand, yeah, pound Swiss, made a pain in my backside. Yeah, pound Swiss is obviously a massive short. Not interested in long in that. Interested in long in the pound at the moment, but we've got the interest rates next week. So at the moment, pound is a short. We've had retail figures coming out negative today, so that's going down. So not looking for opportunities to long the pound. New Zealand dollar Swiss, same thing. Swiss franc, euro moves, Swiss franc moves. We've got a very, very, very weak New Zealand dollar and Aussie dollar at the moment, and the Swissy is taking full advantage of that. Totally counter trend. Yeah, it's a short. So yeah, not a good opportunity there. And New Zealand dollar, US dollar, same thing. Do not want to be really trading against the US dollar, especially after CPI figures. But there is a good chance we may come back and retest this and look for more sellers. And that is where I will be interested in shorting it. If we get back into there, all these new, every single US dollar pair, that's what I'm waiting for. Pull back into the liquidity so that the longs can add to their positions. But, you know, this is a hell of a drop. I just don't think they're going to do it. Anyway, US dollar CAD, there you go. So we're extended to the upside on that one. But again, counter trend. So everything is counter trend that's extended at the moment. Apart from, well, Euro New Zealand is actually counter trend now because we are pushed up. It wasn't counter trend when I got in. And this is what we were discussing yesterday, wasn't it? This is the problem with trend trading. Every single trading strategy, whether you're a trend trader, you're a breakout trader, or you're a mean reversion trader, every single one of them has exactly the same problem. A trend will end. If you get in at the end of a trend, you should have been mean reverting. If you're mean reverting something that is in a strong trend, it can carry on trending. If you take a breakout, you can get stopped out because it's a false breakout and a continuation. So everything has a problem. As a trend trader on this particular trade, that was exactly the wrong time to get in. Exactly. And that's always the problem you're going to have. Whenever you're seeing a trend form, you will at some point get in at the wrong end of it. And that's where I am. So But for God's sake, take profit on this move, will you? Properly. I was virtually out of it there. I think I even had a break-even opportunity around there, and I didn't take it because it looked to me like this was a beautiful M pattern reversal, and we were expecting that. You know, them's the breaks, as they say, as Boris would say. Right, so that's Euro New Zealand. So there's all your RSI extensions. On the hourlies, there's quite a few on the hourlies. I'm not covering the hourlies at the moment as much because I'm not really using them. But US dollar CAD, they're too fast a lot of the time, the hourlies. But if something is extended on 4 hour and embedded on 4 hour, you're going to see it massively extended on the hourly. So you can really just rely on the 4 hourly because that's the same thing. Look at that. Weak pound, strong euro. Euro's coming down, euro's coming down. Yeah, so that's, oops, that's the pound. Very weak pound this morning off the back of those retail figures. The market didn't like that at all. Is anybody still in any yens? Those yen shorts. We're going to have a look at everything in a minute, but they still haven't gone anywhere, have they? Right. So let's start off with oil. I'm just going to run through all the pairs. If there's anything you want me to look at in any more detail or specifically, let me know. I've stopped out of DAX. So that's starting a pullback. No, it's not. It's just stopped me out and then it's gone. Thank you, DAX. Love you. Yeah. And gone down. So this is my final position in the DAX, which was my first one, which I took all the way back. All the way back. There. So back, basically. So we had a 3-day push against me. Now we're back down at double bottom. So if we break these levels today, we should get a very nice flush. But obviously we've got the opportunity to do that as well. So I'll add on up here if we get up there. Right. Oil. So oil obviously is still coming down. I've fallen out of love with it since it hurt me so badly. Yeah. It's ruined my month, basically, oil. So just really, we got that pullback. I was scaling in down here. I got to my not interested anymore point, and I took the loss. And as immediately as I took the loss, we pumped, which would have got me out with about 3 or 4% profit. But since then, we've had the pullback. We haven't managed to break this high, which was the $90 a barrel. So we are flip-flopping in a big $10 barrel range at the moment. Unsure where we're going to go, but the bottom I thought we were going to get is the 85, 86 a barrel. We're back down below that now. So one or two things is going to happen from here. We're going to see that rally, or we're not. But there seems to be an awful lot of energy suppliers stepping in and filling the void in oil, which is potentially why I think we might be getting this drop. As I say, this is something I started trading a couple of months ago as a new instrument. I don't fully understand the mechanics of it because I haven't been trading it. So something else is driving this down. It is a supply, like with anything, it's a supply and demand driven commodity. We have high demand, we have anticipated higher demand, and we have dwindling supply and constricted supply with what's going on with Russia. Those two instances should drive up prices, but it's not. So there's obviously some mechanic with these additional suppliers like Canada stepping in with liquid natural gas supplies to Europe and things like that, which is keeping these prices suppressed. But when you look at the pre-Ukraine, this area here, we rallied from that area before So we were starting an uptrend before the Russia-Ukraine thing happened. So we've come back down into this area of support at the moment, which seems at the moment to have held, but we need that break of the high there to confirm there is bullish sentiment in the market. So difficult to understand really which way this is going to go from here. Looking at it from a technical perspective, I would say we were looking for shorts. From a fundamental perspective, my brain thinks we should be going long on it, but at the moment, market's proving me wrong on that one. So don't really know on oil at the moment is the honest answer. We're bang in the middle of that potential range forming, that $10 barrel. So I would look to long it down there, or maybe short it up at those highs, because it's very, very nice market structure on it. But it does these big, fast moves like gold, which is where you get caught out when you're position trading. I got in a little bit too close on it because I got a bit overconfident with it because I'd made so much out of it. And that is when you always get slapped on the back of the wrist. The market will always tell you when you're being overconfident. So I still think it's a long, but I don't really know at the moment, so I'm steering clear of it. I am watching it because I'm still interested in trading it. It stung me once, but it's also paid me. It paid me 25% and took 8% off me. So I've made 14% in 2 months, which for an instrument is a very high return. So I'm still interested in it, but I'm cautious about it at the moment. So I'm just watching it. So I want to see what happens. And I want to see this market structure continue. If it does that and then pulls back nicely, I would be tempted again on it. So we'll see. December rise in oil was when Russia started missing its troops on the Ukraine border. Oh, massing its troops. Yes, yeah, that's right, yeah. Oh, here you mean. Was it December? So it took 3 months, 2 months, was it? I only really hit the news kind of about here, sort of a few weeks before. We were like, Russia's massing its troops on the border. Obviously, they've been doing it for a lot longer. But I wasn't paying any attention because neither was the news. Anyway, but yeah, that's the thing. We're in a conflict. We should be seeing prices rise because supply's restricted, isn't it? But there's obviously a lot more players coming in the market now. New Zealand dollar yen, mean reversion buy, Adrian. Yes. Yeah, good looking opportunity for a long there. I'll cover all those in a minute. So DAX, I've kind of covered. That's dropping at the moment. NASDAQ, yesterday, we had another down day. So we had our pause day. We had another down day. We've made a new low and we've gapped down. So this is a very heavy market. When we get these big gaps, they, like you can see here, one of two things happens. So that was a bigger gap, actually. There's the gap there. We filled it on the same day, and then we flushed. So that's what we've got to be aware of today. At the moment, very difficult to tell. These are lovely gap fills, which I love. Invasion was delayed by risk of heavy rain. Crazy, isn't it? What's the weather? No, we can't go to war today. Tanks will get stuck. It's true, though. That's why they do it, isn't it? Because they can't get the heavy artillery through. But yeah, didn't have those problems in World War I or World War II. Just got on with it. It's the snowflake war generation, isn't it? Morning, Neo. So yeah, that NASDAQ, obviously we had that gap down. So we need to be aware of that today. So look for signs of bullishness, which we are getting now. 3-bar reversal going in at the moment. That's a long way to go. So we might get a very strong bull run during Globex. We may also get a slow grind move around and then a big spike happening this afternoon on University of Michigan numbers. They may come up, fill the gap, and then drop it from there. So difficult to tell at the moment, but could go either way this morning, all of the indices. But all of them did the same thing as they always do. We had that drop. So the Dow, we had 3 down days. We didn't get that is still a pause day. It's just a slightly different pause day. We got a positive pause day on the S&P, and we got a positive pause day on the NASDAQ, but all gapped down. So we've got either a gap play or not. Either way, we're heading for these lows. So it's just a case of when we're going to get there and how long it's going to take to get there. We don't know. So I'm still short the market, and I will remain short the market until we get down to these lows, and then we will probably get a bounce. But this, like with the DAX, this will be the 4th time. And the 4th time is usually not a bounce. The 4th time is when you smash through the door and go. So, and that is when I would expect us to start making headway towards our pre-COVID levels, which is what the market's estimation is. We'll see. But yeah, that's the indices. Morning, Tammy. I'll cover all the ends quickly. So obviously the ends are off the scale at the moment still. We haven't got any... There's positive rumblings coming out of Japan, but it's the same as we always get. It's the usual talk of, we're not happy about this situation. If necessary, we will do something about this situation. And then they turn around and say, well, we haven't got anything to do with this situation because we've exhausted all of our monetary policy options. So it's business as usual. The yen will just keep getting weak. So critical for Forex to move steadily in response to economic fundamentals. Sharp currency movements are undesirable. Yes. I'm concerned about the recent sharp one-sided yen depreciation. What are you going to do about it? If the sharp yen move continue, we will take the necessary action without ruling out any possibilities. You've exhausted them all. There's nothing in here. It's just talk. We will compile economic measures as needed. You put a massive plan into place 6 months ago, which looked amazing. The market went, really? Oh, that's fantastic. Let's buy the yen. Then you didn't do it. What's changed? Nothing. So these pullbacks that we're getting on the yen at the moment, I consider to be good buying opportunities if they're pulling back. So we've got up to this high, double topped on the yen, on the US dollar yen. So we're in this big range, bang in the middle of it at the moment. I'm looking to buy down here, really. I don't want to be buying up there. So we're still very high. There is a very good chance this could go. So for me, until we've had a sharp move and I can see a good profit-taking potential, and that could well be just a sell-off of the move, I'm not really interested in that one. New Zealand dollar yen has dropped on New Zealand dollar weakness, not on yen strength. So the only way this is coming back up is if we get New Zealand dollar strength. We got a bullish engulfing in there this morning. We had a bullish engulfing a couple of days ago as well at the 24, and that's when I said that's a good long. Someone brought it up in the Telegram group and was like, yeah, looks like a good long. I couldn't take it because I was exposed on the New Zealand. I'm still exposed on New Zealand. I still can't take it. But yeah, good opportunity. We've got ever so... I don't like flat divergence. I like divergence to be that. That's very strong divergence. This is what I would kind of class as weak divergence, double bottom followed by a drop in price. It's still bullish. We're down in the 24.72 area, which is where we like to support ourselves. So it's a good long opportunity. How far it will go will be dependent on New Zealand dollar. The worrying thing is if the yen, the Japanese, do come out and instead of talking, actually do something, not quite sure what they've got left in their toolkit, to be honest. But if they do find something or come to an agreement with another country to basically buy up more yen, then we will see strength in the yen. But I'm not sure at the moment any other country is going to be interested in that because they're all looking to go into recession, struggling with inflation and having to put their interest rates up. So it's like saying, you know, America is sitting there going, we've got to look after our population, and Japan going like, can you help our population out as well? Yeah, normally we would, mate, but we're skint at the minute. That's basically what yen is looking for, and they're not getting it. So I can't see how we're going to get yen strength at the moment. So we should be still looking for upward momentum. But in this case, the New Zealand dollar is weaker than the yen at the minute, which is saying something. So this drop and the same you'll see on the Aussie are opportunities to get in down here. We're not extended. It's not a fast, sharp move, which will likely have an elastic band effect like this. Yeah, these are the good ones. These are the good RSI extensions. It didn't get extended. If it had have got extended, those are the ones you're looking for. Fast move down. Yeah, fast move. That's the elastic band effect. Fast move, fast move, fast move. Not quite as fast, but if it gets down into here, we're going to get extended in the RSI. That's when I'm looking to long it. If you are on both of these, basically the same sort of thing. We are extended on the New Zealand, so this one is actually a legitimate signal to go long now. Hourlies you can look at on these as well. You'll get more opportunities on the hourlies to get into these longs, because obviously what we're finding, if you look at the 4 hours, is we're getting these pullbacks. We're not getting 4-hour extensions. You will get an hourly extension on that. So you can trade hourly M5 rather than H4 M15. There's your other options. Obviously, it's more dangerous trading lower timeframes, because if you get extended on the hourly, doesn't mean the 4 hours there yet. So there's more room to come down. Possibly. You never know. So there's always a risk involved in everything you take. Every entry you take, first entry, is either going to work or not. And you just manage it accordingly. But Aussie is also getting towards a good opportunity to go long. CAD yen, we've come down. Again, CAD weakness, not yen strength. That is where I would be interested. We've got a propulsion gap here, and I would class that whole thing as a propulsion gap. There. Which coincides with potential bounce point support. So, and then 24 will be coming underneath it. So that's a good looking opportunity. If we can get a little bit more down on the CAD yen, that would be a good looking long. Swiss yen, not going anywhere. Swissy's strong at the moment with the euro, not going anywhere. So we're just stuck up at the moment, up at this kind of support bouncing around. And the pound yen massively weak. This is the one, I've said it before, this is the weakest of the yens. This is the only one that we haven't managed to go into a trend on, because the pound is so weak. So you are basically trading in the middle of a range at the minute, if you take a long here, with a possibility coming down there. But again, bear in mind, next week, we've got the rate announcement from the Bank of Japan and from the pound on the same day. So if you start trading the pound yen next Wednesday, this thing could go absolutely anywhere. So again, this is why we look at the news, what's coming up. If I'm going to get into a position right now, I need to be out of this by next Thursday. If I'm not out of this by next Thursday, there's a potential that I'm going to get the sort of move we've just had on the US dollar. But equally, if I get into it now, on next Thursday, there's a possibility that thing's going to go my way and I'm going to make an absolute fortune. That's what drives the market, news and fundamentals. So if you're getting into this as a long now, we could have negative sentiment come out from Japan and positive rate increase above expectation on the pound, and this thing's going to go through the roof. So this is exactly where you want to be buying. But you're buying something which is at the moment got a negative against a negative, which is why we're in a range. So it's very difficult to take the pound. So the yens are still a little bit of a state of confusion. New Zealand dollar yen, I would say, is the best opportunity out there at the moment. And odds law, it's the one that I can't get into because I've got my maximum exposure on the New Zealand dollar. So there's nothing I can do about that. But they're getting close. A lot of them are getting close. So keep an eye on all the yens at the minute. Aussies are very weak. Again, nothing extended. So there's no, looking at the 4 hours, everything we've looked at on the 4 hours are extended in the wrong direction for me personally. But I would be looking on Aussie CAD for short movement, so short opportunities, but haven't really had anything apart from up there. But if you want to take these on the hourly, drop down to the hourly. You had an opportunity to get into it Friday last week, just about. But this is the thing, we're getting these just abouts on the hourly as well, which is why I haven't been paying much attention to the hourly dash at the moment. But we came up and filled all these propulsion gaps, and then collapsed. The Canadian dollar obviously moves with the US dollar, and the US dollar had CPI, which moved that. So this is looking good for short opportunities. Any trading into that area, we haven't managed to, and this is a great example of the propulsion gap. Yeah, that's where we stopped, pulled back to, and as soon as we got back to that level, the sellers added to their positions. We drove price back down again. Doesn't look like we're going to get back there again. So if this makes a new low, we're off. We'll be down to those lows. So good looking short opportunity right there. But if it gets into there and we got an ADR hit to the upside, I'd be very interested in shorting that. We're not there. Aussie dollar Swiss dropping like a stone. Swiss franc strength, Aussie dollar weakness. No opportunities there. You can counter trend it. The same with all of these. You can counter trend all of these, but obviously bear in mind, again, you've got flat divergence. So you've got bullish divergence and you're getting those bullish moves. You've got that bullish move, but is it enough to get you out? So again, counter trend. This thing's been short since the Swiss franc rate announcement. Fundamentally, Swiss franc stronger than the Aussie. No reason to change that at the moment until the SMB press conference next week. And again, this is next week. All change. All change next week. Potentially, we don't know. Aussie New Zealand, still like it as a long. I took some longs. Did I take some longs in here? I can't remember if I did long that. I can't remember. I wanted to. I can't remember if I had the opportunity to, but I've been looking for longs on the Aussie New Zealand. I've been trading this long for ages. Whenever it gives an opportunity below the 24, I'm in. That is one I should have taken, really, in hindsight, but it was a hindsight. I didn't take it. So that would have been a lovely one, but I didn't get in on that. Not looking to short it. These are both weak at the moment, so it's 50-50 flip a coin as to whether we're going to get that or that, really. We've tried to break out 4 times and haven't. We tried to break out 3 times above that high and failed. So I get the feeling we're probably going to get a pullback, and if we do, I'd be interested in longing it. Again, you can look at the hourly for an opportunity to get in here. Look at the hourly extension. That's when you can get in. But very, very, very weakly range on the pound Swiss. The pound is coming down very hard. Very, very, very small ADR. You're tying up your Aussie and your New Zealand exposure in the slowest moving thing. But I really like it. It just works, the Aussie New Zealand. It's just such an easy grinder at the minute. It's worth taking every long opportunity, but you will be in it for weeks. I was in it from here, and I was in and out of it all the way there, and I stopped. Then I got back in, and I went in and out there, and I stopped. I just stop every time it's going to break out because I'm worried about a pullback, because that's the way I trade. But yeah, I'd still be interested in long opportunities if it comes back down. Aussie US coming down hard, short on this. I've got break-even stop on this one at the moment. Nice bit of profit. I've got a TP set on this one at the moment down here towards ADR today, which is going to be 0.7, 0.8%. I'm either going to stop out on this or it's going to hit my TP, one or the other. If we get down to here by New York, I'll probably bank it. I might bank it anyway. It depends how I need to see what happens with the Euro New Zealand. At the moment, nothing is happening with the Euro New Zealand. But this is very, very extended now. We got the push down on CPI. We've broken this low now here. Oh, no, we haven't. Sorry. We're approaching this low here. This is why I'm break-even stopping on this one. My head's not with it this morning. So we're likely to find liquidity there. We did, this is kind of why I put this stop on. We got this 3-bar reversal. We looked like we tapped into this and it looked like it might be coming, but now it looks a lot shorter. If we break this level, again, there is a possibility we may do a liquidity run on that, which will bring us down potentially to ADR. So I'm going to get out a bit before ADR. We might then start a pullback into this area in preparation for FOMC. So just think, this is 3 days odd of price action. Think about FOMC next Wednesday. Yeah, we're in Friday, Monday, Tuesday, Wednesday. If we're going to start pullback for FOMC to get more shorts in, that's the sort of movement I can see happening. So I either want that to happen, and if it collapses, that's fine. I will take what I've got. But if it's collapsing, obviously, I don't want to be taking any more shorts. So the EA is turned off now. I'm not in this anymore. I've got nothing running on the EA on US dollar anymore. I had every single trade I've taken on the US dollar has just been straight in, straight out, straight in, straight out, with somewhere between 0.5% to 1%. Obviously, my P&L doesn't reflect it because the Euro New Zealand's been mucking me about. But had some very nice trades on this. So not interested in mean reversion opportunities on it. Although I think there's a high probability that they may happen. This is the US dollar, and if it wants to go and it wants to power up, especially off the back of nice fundamental news, it will do. And if we've got positive mumblings coming out of the US ahead of FOMC, that this is cast iron in stone, definitely going to happen, potentially that, then I think the US dollar is going to pump. That obviously Aussie US is going to come down pretty hard. So that's just basically what I'm doing with that one at the minute. I might even put a trailer on that because it's getting nearly $200 on it. Yeah, let's trail it. We've just broken the low. So we're either going to pop from here or we're going to revert. So I'm going to stick a trailer on it. Might as well. 80 pip trailer. So what we'll either get here, because we've now taken, if there was liquidity sitting here, we're just going to run that liquidity until we run out, and then we're going to come back. So I don't know how far it's going to run the liquidity. We might see a little pullback and then that sort of movement. What we had on the DAX yesterday, the DAX sold off like a dream, which is what I traded on the funded account yesterday. I traded this this DAX and the ES drop yesterday. I got in here. I can't show you. I can show my trades, can't I? So there's my trades I took yesterday on that one. The reason for the trade was that. So as soon as I got that 3-bar reversal started, I shorted it. Confirmation bar, I shorted it again. And then I got out of those two down there, waited for the pullback. As soon as we started to roll over, took another one and got out at the lows. And that's the sort of move that I would expect to happen on this, if it's going to. You know, you get that move through wrong instrument. You get that, there we go. I was just going to say, you get that pop when it just happened as I got on it. You get this pop. And this is basically all these buy orders sitting down here, or the stop orders sitting down here. So, you know, it's everybody that's gone long there. It's all their stops being eaten up. It's everybody that's buying the double bottom. It's all their buy orders being eaten up. And they're just running through that liquidity. They will get to a point where they literally, there's nothing left. And then you'll get that pullback. And you don't know how far that's going to be. And that's what happened with the DAX and the Dow yesterday. When we started that sell-off, it ran, and then it moved up, and then it ran again. So that's what the trailer's for, is to ride that wave if that wave is going to continue. But I want to keep it tight in case we get a big bullish engulfing, because what do you see on false breakouts? Move down, and then immediately move back up and a close above. If that's going to happen, I want to be out of it. Either way, I'm going to be banking $200 odd. Morning, Stevie. 8:30, you said that? That was ages ago. So yeah, just let that run. So that's Aussie US. I'll be out of that one, but I'm not looking to buy it. CAD Swiss, same thing, dropping down hard. We've looked at the yens. Not looking to get into this. It's a lovely mean reversion opportunity. It's more positive divergence really than most of the other pairs at the moment. This is a really good example of what I like to see in divergence. That and that. So an upward, you want this one going up, that one going down. This is kind of like that as well. We are in an upward slant and we're obviously in a downward slant. The ones I don't like are where you've got a kind of double bottom on the RSI and a negative move. They don't hold anywhere near as well. I find they will get broke. So good divergence. So it's a good looking opportunity, I think, this one. But you are counter trend trading, so beware. And it's massively extended. You know, there's been no profit take on that elastic band. That's there. We are now 260 pips on a 56 ADR with 5 ADR. 5 ADR drop with no profit take. Big potential move to the upside there. Euro dropping nicely. Yeah, at the moment. Didn't quite get the retest of the reversal alert there, but we break that low. I'm adding another, and I'm adding another down here, which is if we get to this sorry, that's ADR today. No, I'm not adding another there. That when I put that position on yesterday, it was in anticipation of getting a move down overnight, which I don't want another aggressive down there. We're not going to get down here today, I don't think. Well, it's 150 ADR. Anything can happen, obviously, but I don't think we're going to get down that far. So I'm just looking to get out of some profit somewhere down here. So I'm adding on, if we break this low, and then we'll pull back and drop, hopefully. But yeah, this brings me nicely onto the euros. So euro odd, all of these are extended. Again, this is a really tricky one. As to whether or not we're bullish or bearish on the euro, I'm still bearish on the euro. The rates were not enough. The market was not impressed. Yeah, when you saw what happened with CPI with the US dollar. This is the market being impressed. Yeah, that is the market being very happy about fundamental news. The euro rate increase announcement, did not give us that movement. It is still moving up, but the market is not woohoo. That's fantastic. Well done. They're more like, yeah, that's what we thought you were going to say. Now let's see what happens with inflation. So we are still, I think, bearish on this. It's just obviously we've got a lot of weakness in a lot of other currencies, and the euro is a little bit stronger than normal, which is giving it this grinding opportunity to push higher on a lot of pairs. But I think at some point soon we are going to get a good down day or two. Look at it on the daily. Yeah, we get push, pull, push, pull, push. That next pull, there'll be a pull which will be deeper than the others. Yeah, we're just waiting for that that pull to happen to the downside. You know, don't forget, we are still bearish. We have these pops above the 72. Yeah, they happen. Doesn't mean it's bullish. Just because it's pushed above the 72 does not mean it's bullish. It's having a bull run at the moment. Yeah, look at the indices. Same thing. Yeah, we are not in a bull market. We are not in a bull market. This is a pullback in a bear market. Yeah, I think this is a pullback in a bear market still. Still think euro's coming down. But at the moment, it's just grinding. But he's slowing. Look at the rate there. Pullback. Right there. Pullback. Look at that. The distance between there and there, distance between there and there, distance between there and there. Rounding top, potentially. We're not proving it's a rounding top until we make a new low, reversal of that, pullback, drop. So we're not proving that's happening, but speculatively, that is one of the options on the cards at the moment. So this is a good opportunity to get in. EuroCAD, triple top, rejection. Very nice entry on the EuroCAD, potentially there. Very, very nice resistance. Keep trying this level. We can't get through it. Market is not interested in going above that level. We're just rolling over. Good, lovely short opportunity, EuroCAD. If I wasn't so deep on the euro, I would probably take that. I'm out of Aussie US. Stopped out on Aussie US. So see what happens here. We are potentially pulling back above there. So they've run out of liquidity down there. We'll see what happens on that one. But yeah, EuroCAD, lovely bearish engulfing in EuroCAD. We're just about to get a reversal out on the hourly on that. M15 going down hard. Just about to get a reversal out on M15 at that high. So you got two levels there. This is why support and resistance is a zone. It's not exact. Somewhere around there, the market likes to sell. Where it sells is where it runs out of buyers. Wherever it runs out of buyers, it will turn from. That could be it. We're in a downtrend. But we are also in an ascending wedge. And ascending wedges often break to the upside if you're a technical pattern trader. Yeah, there's always an argument for the other way. Wherever I think, there's always an argument for the other way too. You never know. You just got to get in and manage it. But we do know after a strong push, you get a pullback. So it's a good opportunity to get in short. It's either going to be a pullback and break of the. So let's draw it in. Two scenarios we have. It doesn't matter where you draw it. It's a trend line. It's subjective. Some people will draw it there. I like this because the reason I like this is because of these wicks. That's my preferred one. So ignore that. I ignore that. There's more hits to that. So that makes more sense to me. So we're either going to get one or two things happening. Pullback, break. And when that breaks, that could break hard. Or we're going to get contraction, break, and then drop, obviously. Continuation of trend. You need to decide which fence you're on. Euro Swiss, short double bottom. So we've had that double bottom bounce, but again, we're in a downtrend. The market is more likely to continue the trend. Swiss franc, good strength at the minute. Euros had good strength, but obviously, this shows you why the Swissy is so important. Yeah, the euro has been running wild with everything, hasn't it? It cannot keep on top of the Swiss franc. All the money in Europe goes through the Swiss banking system at some point, most of it. And a lot of other money from a lot of other countries goes through the Swiss banking system. It's a strong currency. So smashing it down, I'll be looking for shorts. That was the short. Didn't take it. Or did I take it? I can't remember. Euro pound. Again, ADR is getting a bit better on this. Typically, it's always been a low ADR pair, same as the Aussie New Zealand. This is obviously pound weakness at the moment, driving this up here. So we had this double top. If you look at this as a liquidity run, we've got this level. Just draw it in, make sure I'm getting the right level, which we bounced off of. Massive bearish engulfing. What did the entire universe do? Short it, put a stop above. Thank you very much. Very good chance we might get that move. Obviously, what's scuppering this at the moment is the pound is so weak, so it's got no opportunity to go through the roof. But if the euro is starting to weaken across the board, when that pound stops being weak and they've sold off all the orders for the retail news, we'll probably find this will come back down again. So difficult to tell. We're moving into an uptrend. This is euro pound. You're trading a weak currency against a weak currency. Very difficult to pick a direction when you've got no strength or weakness on either side. But from a liquidity run point of view, the entire universe sold that. Everybody saw that double top. Everybody saw that bearish engulfing. Everybody's gone short. Everybody's got to stop there. They did. So what do the banks usually do after a liquidity run? Run with it in the opposite direction. Morning, Sammy. Yes, you are late. Slap on the wrist. Euro yen covered. Euro New Zealand. I'm short. It's pushing up again. Look. Toying with me. Toying with me. So we had the propulsion gap, which they sold back out of. But there's still a lot of buyers on this. Like, still just very, very weak New Zealand. But we've got lovely targets to aim for to the downside. And on the higher time frames, we haven't even tested this yet. Actually, we have tested it there. Rejected. But, we got a lot of targets down here. We will come back down and retest these levels at some point. It's just, and this is, like I keep saying, your comfort level and my comfort level are going to be different. My comfort level at the moment is uncomfortable. You may be comfortable up here. So you'll be taking different approach to this than me. I still think and have conviction that we're coming down here, but I'm on the verge of saying I've had enough of you and starting to scale out of some of this like I did with oil. Because it's getting to the point where what's a flag for me with these squeezes is when I see this go from 3.5 to 5 to 3.5 to 5 to 3.5 to 5 and me not make any progress and start to lose money because the aggressive positions aren't working. It's a sign that we're just doing accumulation pushes. And that's a flag to me that I need to start whittling some of this away and using some of this profit. Yeah, I've got 6%. Worst case scenario right now is I can shut the whole lot, walk away and go, I've still got a week and a half left to see if I can get 3 to 5% out of the month and just take the pressure off. I don't like to do that because I still have conviction short on the euro. But when we start getting to these sorts of levels, if it doesn't happen soon, I am going to start to scale out some of this and take loss because it's just not getting anywhere. But it's just one of those situations. You get it every now and again, and you got to deal with it when you get it. It's just unfortunate this month I've had oil to deal with as well. So when two of them come along at once, it's just a bit of a pain in the backside, but it happens. And this is why we have our exposure. Yeah, prime example. Yeah, can you imagine if I'd have taken 2 euro shorts? Can you imagine if I'd have taken 3 euro shorts? That would be horrible, wouldn't it? This is why we have this exposure. Yeah, this is exposed. This is exposed. This is very exposed. That would be hideously exposed. I don't even like being very exposed at the moment because the market's so volatile. I'm even thinking very, very hard about taking 2 positions on one currency. I'd much rather be in one, but you've got to get the risk on to get the money. So euro US dollar short, and it's obviously gone. The opportunity was there ahead of news, which was a dangerous trade. So that was a very risky opportunity to get in. If you took it, you were very well rewarded, but equally CPI could have come out the opposite way, couldn't it? And you could be sitting on the wrong side of this now, looking at that. But it worked out. So I'm not interested in these entries ahead of news, just in case. But that was the entry. Pound odds short. So all pounds still short until next week, until we get the rate announcement. Rate announcement comes out as expected. I suspect we should still be short. We have got inflationary pressure easing with the new policies coming in on caps on energy, which is going to help us. It's going to reduce our recession and reduce our inflation by up to 5%, which is going to be lovely. But it's only, and I said this before, it's only going to reduce our inflation by 5%, not getting on top of it. Instead of a 22% forecast for inflation, we're only going to get 18%. That is still an incredibly bad number, a negative pound. Yeah, just because it's 5, just because she's come out and gone, hey, look, everybody, we're going to save 5%. That doesn't mean the market wants to go long the pound. It means it's not going to be as short the pound moving forward. And the likelihood is the pound will be in recession for less time. That's all that's going to do. It's not going to stop us going into recession. It's just going to ease the pain a little bit and the time we will spend there. So still short pound. Aussie is a massive weak monster at the minute as well. So we've had this market structure shift to the upside on the pound. Right now, it looks like it's trying to shift back down on negative retail. So any kind of push on the Aussie will bump this down. Any push on the pound will bump this up. But at the end of the day, you've kind of got that sort of scenario in a downtrend because you want to be looking for shorts. Hence me being in pound New Zealand, which is the other version of this pound odd. But it was more extended, so a better opportunity, and we were at a good support resistance. So yeah, pound odd, pound New Zealand, both shorts. I'm in pound New Zealand short, obviously, at the moment already. Pound odd is a nice looking short, not quite as extended, but still, this 24.72 zone is just beautiful. As you know, if we're in a trend, this is where we will usually find we run out of steam. Pound CAD, the Canadian dollar is weak at the minute, hence we've had a flag. We've broken that flag. Any kind of strength on the CAD, any kind of strength on oil, and this is going to get pushed down harder. So it's not had an opportunity since here. So yeah, I got asked a question. Somebody DM'd me. It's weird. I've got this Telegram group where I encourage everybody to talk about the strategy and stuff. Any question, I always get DM'd, and I'm like, well, why don't you ask this in Telegram group so everybody can benefit from the answer? And everybody seems to be scared. I'm not that scared, am I? Everybody seems to be scared, which is fine, I understand, because people think they might be asking a stupid question and they don't want to look stupid, and I totally get that. But I got asked the question, why, when I see this situation playing out over and over and over and over again, why, when I get the signal to go short, don't I hold it for that long? Why didn't I get in short there and hold it? Why didn't I get in short there and hold it? And the answer was, I'm looking to make somewhere between 8 to 15% a month. And it's always the same answer. I need to make sure that I'm topping this thing up, because at some point, as you can see, I'm probably going to need to use it. If I hold something and it doesn't work out, if I got in on that signal there, and I would have got out here, because I would have made 1 or 2%. And this is always the way with everything, if it moves down there, you are going to put a break-even stop on your trade. Yeah, it is going to take out your break-even stop. So for me to hold it down here, I would have to basically hit the sell button, sit there and pray and hold on to the handlebars on my roller coaster for a month. And that's just not me. If it's you, fantastic. This is a swing trade strategy that I'm describing here. I haven't got the balls to hold a swing. I can't do it. It's not me. It may be other people, but that's the answer to the question. You know, I keep saying, look at these 72 and 24 bounces. Aren't they beautiful? Then why don't you sit there and hold it when you know that the target is always going to be a break of the low? Yeah. That's what I'm expecting every time this happens, a break of the previous low. So why not hold it down to the break of the previous low? Because I haven't got the balls. Honest answer, I can't do it. If you can, do it. This is how I traded the S&P, and I have traded the S&P for 2 or 3 years, when the S&P has been doing that. But the S&P, I'm always confident, is going to be doing that until we get into a bear market, which we found in December, and then I stopped my investment account in the S&P, and I haven't traded it. You always stop with a trend, and this is what my mentor used to say to me, who introduced me to these moving averages. He said, when it's red, you sell it. When it goes green, you buy it. Or When it goes red, you sell it. When it goes green, you stop selling it. And that's what I did with the S&P for years. When it went green, I bought it. And I kept buying it. When it went red, I stopped buying it. And I waited for it to go green again, then I bought it again. When it went red, I stopped buying it. I stopped here. I got back on here and I stopped there. And if you remember, if you were in the live room at that time, I said, I'm going to try and mean revert this and assume that we're going to get it. If we break this low, I'm going to stop. And I stopped. And the last trade you take is a loss. And you keep buying it. Every time it pulls back, you buy it. Every time it pulls back, you buy it. And you just keep doing that with the S&P. And this is what people like Warren Buffett do. Yeah, they're looking to get 8 to 10% a year return out of the S&P. And all they do is they buy the dip. But they're doing it with $20 billion. So only making 8 or 10% on $20 billion is enough to keep you going for the rest of your life, obviously. So money makes money. I can't do that. But that, and that's the question I got asked. So I just thought I'd share the answer because that is my answer. That's why I don't hold these drops, because I just can't. But some people can. But if you can, do it. There's a very, very high probability you're going to get those breaks of those lows. That's what the market's doing in a trend, isn't it? Making new lows. That's the definition of a trend. Lower high, lower low, lower high, lower low, lower high, lower low. Yeah. As soon as you get in on that RSI extension to the upside, you're putting in a lower high. What are you expecting? A lower low. All the time. When you get that bullish engulfing candle, that wasn't a bullish engulfing, but if you did get that bullish engulfing candle, you get brown pants and you get out. And what do you get out with? Very nice chunk of profit. Thank you very much. Job done. My job is to get in and get out with money in the bank, and that's what I do. I could get in, and sometimes I could get out with 10 times more. But I would rather find other opportunities. But that's me. That's the way I trade. Everybody trades differently. I can't remember what pair I got to. But you can see they're all the same, basically. We're selling the pound. So look for opportunities to sell the pound. Pound odd. Pound Swiss, pound yen I've covered. Pound New Zealand I'm in. Pound US, sell it. When you get an opportunity to sell it. That's the area that I highlighted. That bounce, what did it do? Beautifully. Offer the fundamentals. So just sell it when you can. New Zealand CAD, weak at the moment, New Zealand. No strength in the Canadian dollar either. We're in a very nice accumulation here after this propulsion move, which is based off of the US dollar CPI. That's why the CAD pushed so hard. With a weak New Zealand dollar and weak CAD, we've just sat sideways. So this will be dependent on what happens with the US dollar news next, which is FOMC next week. So I can see a pullback forming before FOMC on all the US dollar pairs potentially, but that CPI figure could have been strong enough to just push into FOMC and then continue in FOMC because they're expecting the rate to get increased, which it will do. That's probably enough. But those inflation figures were higher than expected. So the market will be saying, right, that 3.25 was fine when we thought the CPI figures were going to be different. CPI figures came out better, higher than expected. So should we be increasing that? I don't know what the market's going to make of it when we get this 3.25. It could have a negative reaction to it. But either way, we're going to get some jostling ahead of it, and that's going to drag the CAD with it. And especially if we get oil strength, obviously. If you get oil strength, we're going to get that, obviously, aren't we? But we'll see. But at the moment, it's a short. It's not getting anywhere near RSI extensions. Hourly, you've not had any opportunities at all. Nothing for nearly a month. It's not given any opportunities to get in. So yeah, nothing there. New Zealand dollar Swiss, same thing. Shorts, we went off of the rates, we went sideways. We were massively extended to the downside. There was growing risk of something. Recession in the Eurozone. They're still in denial. The FOMC, the Fed were in denial until last month, and then they said, looks like we're going into a recession. These guys are still in denial. That will change soon. They will announce they're going into recession soon, which obviously isn't going to be bullish for the euro. But yeah, so New Zealand dollar Swiss looking for short opportunities. Not really had any. Had one there again. 24.72 zone, RSI extension, just lovely. You could take everything. You know, there's another strategy that I've been. I haven't done any back testing on it yet. I'm going to build an EA to back test this at some point. But the strategy is going to be based on H4, H1. So I will be looking for, actually it's not, that's a lie. It's based on D1, H1. Better to show it on the daily chart. The strategy is basically price being in the 24.72 zone on the daily with an RSI extension on the hourly up here, which will be indicative of a pullback into the 24.72 zone and the hourly being extended, looking for 5-minute shorts. I'm going to build an EA to back test it, but when you've got these pairs that you can't get into, like this beautiful downtrend where we've not had any opportunity to get into it, but it's dropped very, very nicely, you're going to find that that sort of strategy is going to get you in on a lot of pairs. So I'm going to test it, but it's shorts all the way, New Zealand dollar Swiss at the moment. Good chance of a pullback. I couldn't tell you where we're going to pull back to. That could have been it, the way it's going at the moment. Small flag, drop, small flag. This could be it. It could well pull back into resistance there at 175 ADR and go from there. It could be big and bold and brave. We could have a strong New Zealand dollar. We could have a weak euro, which drags down the Swiss franc, and the New Zealand dollar gets a chance to get back up into this area here, by which time we'll be coming up to tap into the 72. But that's where I'm interested, shorting. New Zealand dollar yen, obviously that's the one we looked at, bullish. So this is really the only one I'm interested in at the moment from a yen perspective for a long. We just need to get to New Zealand dollar strength. So nothing at the moment. Next week we've got Aussie monetary policy, which will affect the New Zealand dollar. We've got no news on the New Zealand dollar next week, so yeah, it's obviously a bank holiday on Monday, so I'm not here Monday, obviously. Nobody will be, I don't think. New Zealand dollar US dollar is a short. Again, short opportunity at the 24. We didn't get the extension there. If you'd have been looking at the hourly, you would have. Yeah, this is and this is what I'm saying about this strategy. This will get us into these trades, which is the ones that we're missing out on at the moment. Unless you are watching the hourly all the time. But I'm interested in hourly RSI extensions when they are in this area, or touching, or have just touched. You know, there's got to be some interaction with the 24.72 and an hourly push. So there'd have been a trade there, there'd been a trade there on the hourly. But you had a signal on the 4 hour there, didn't you? So, but anyway, just another thing I'm looking at. Let's get rid of that. That's another chart. Look at US dollar CAD. There's my exit. It's gone. So that line there is what? Probably from another chart. I don't know what that line is, but off to the races. So again, massively extended. You know, this is off of fundamentals. We've also got a weak Canadian dollar today, by the looks of things. No. Quite sure why that. Just obviously just massively strong US dollar. So I suspect the DAX is coming down. Yeah, still coming down. So yeah, US dollar CAD, looking for longs. You know, got out one there, got out one there. Not pushing it. I'm not taking one up there. Again, any kind of pullbacks, we could look for a pullback here, long. A typical support resistance trader is going to be looking for long opportunities here. Yeah. So, some people will be looking, when we pulled out into this area, looking to take a long, which is fine. So you could always drop down, M5. Yeah. We go down into here, we get a reversal alert there. Take a long there. Personally, I just want it to be a lot deeper. But so that's off. That's the trades played out. I got in exactly the right time and I got out. And again, look, I could have held that. But this is the thing. I'd say with that question that I got asked, why don't you hold it? Because I've got 1% profit. I've got 0.75% profit. That's what I'm after. I'm after growing my account on a regular basis. I'm not after home runs. Yeah, these 10-to-1 risk-rewardy type trades, yeah, they come around every now and again, but I'm not taking risk-reward, am I? Different thing, different strategy. US dollar Swiss, unknown. Don't know what to do with this at all. Confusing as hell, US dollar Swiss at the moment, so I'm steering clear. This is the one I've been saying, and I haven't had the balls to do it, but I've been saying you literally could take every opportunity you get on the RSI and it will play out. But it's such a fast moving, volatile thing at the moment, and I have got no directional bias on it, so I just don't feel comfortable trading the US dollar Swiss at the minute. Moving averages are very sideways. We are very undecided, obviously, at the moment on direction. There is no directional bias on it. They are both pushed and pulled around a lot. So it's very difficult to take opportunities. That was a very obvious short up there. It was very extended here and it pushed, so it's very difficult to trade at the moment, this one, so I'm keeping clear of it. US dollar yen I've covered. So there you go. I'm in US dollar CAD short. Can I get out of it? Yes, you can. You're in US dollar CAD short? Why are you short? We've just had a fundamental shift on the US dollar. CPI figures way bigger than we were expecting. Big, strong US dollar. I can see why you've shorted it, but greed, Lee, prefer the consistency and smaller profits. Exactly, yeah, this is it, greed. Greed kills more traders than anything. Greed is the worst thing, just the worst thing in trading. Greedy traders very, very rarely make money. Everybody's been a greedy trader. It depends how many positions you got in. You entered yesterday. So if you got in yesterday, somewhere around here, probably somewhere around there, I would guess. You're an ADR away. Let me guess, ADR reversals, as the other ones have said. Yeah, that's not an ADR reversal yesterday. We didn't get an ADR out of that yesterday, did we? 86. Yeah, we didn't get an ADR yesterday. And I don't think you would have had a reversal alert on that. You'd have had one late. The only reverse alerts you had yesterday was one in there. In the New York session, you had one there. No, you didn't. You had one there in the New York session. So that the only reverse alerts you had yesterday were there and there. So whichever of those you've taken, if you've taken one, you're only roughly an ADR away. So yeah, you're in it. You're in it. You've got to deal with it. Up to you what you want to do. There is a very good probability the US dollar is going to pull back. Yeah, we've had this move, right? And look at what I did. I was long. I got out. A lot of people that are trading with stop losses will be basically long, stop at break even, sitting up here, adding to their positions and in lots and lots of profit. They will have moved stops up somewhere under here. So there's going to be stops probably sitting here. I wouldn't be surprised if the market came back and retested this area at all. It's extended. People are going to want to take profit on this that haven't got out so far. So there's a good chance it's going to come down. But if you get there and look at where we are on the daily, yeah? We're in an area of balance. Let me draw this area of balance. Yeah. So we're in this area of balance here. Yeah. We were happy to trade. Price discovery, back into balance. Price discovery, first time back into balance. There's a good chance we're going to go and chop around in here for a while. So there is a high probability that you are going to get a lot of push and pull in this area. In which case, if you're in there and you get in now, well, not now, get in there on the next reversal. Let me just take that off because it's really distracting. Whoops. If you get in on the next reversal on M5 or M15, M5 I would say, get in tighter, and we get a pullback down to here, you're going to get out, aren't you? So if you want to get out of it, you've got two options. You can either shut it down and say, whoops, or you can hope that we get a pullback. Then there's lots of areas we're going to potentially pull back into. You're not going to need much, are you? If you know, don't forget, when you're taking two positions, the second you take that second position, your average drops, goes up to halfway. The second position is always really easy to get out of. Yeah, whenever you get into one position and then you take a second position, I did with Pound New Zealand, yeah? This is a really good example, actually, Pound New Zealand with this. So there was my initial short. Let me go to M15 so we can see what we're doing. My initial short was, I don't know, somewhere in here or here. I don't know where I took this one. Somewhere there, obviously. I took a second position, yeah, and immediately my break-even was there. It came down to my break-even virtually straight away. And obviously I could have got out of both of these trades with a profit and shut them both. So when you get into your first position after a push, if you get an accumulation push, there's usually some kind of deeper pullback, which gives you a break-even out. So if you get into something you think, oh, I really wish I hadn't have done that, take a second position and get out of it. Don't go for profit. Just get out of break-even and go, whoops. The danger is obviously you get into that second position and you get an accumulation push, in which case then you need to take a third. Then your break-even is going to be at your second position. Then it becomes slightly more difficult because you get often a bounce off of your, and this is why people always say, why does it bounce off of my break-even line? Because market structure dictates that we do that, yeah? Because it comes to support and resistance, and we are taking reversal alerts at these levels. That's what reversal alerts are. They are breaks in structure, changes in direction. That's why your break-even is virtually always somewhere around a level of support and resistance. And that is why it bounces off of your break-even line all the time. But that is your opportunity to go, glad to be out, didn't want to be in it. So that's all you can do, that US dollar CAD. Or you can take a hit. It depends how far it pushes today before it gives you a reversal alert. If it does an ADR hit today before it gives you an M5 reversal alert, and you're in yesterday, somewhere around there, and then you're in there, you break even somewhere around there, and look where it is. A support and resistance level, which quite possibly will happen again, or it won't. I don't know. You don't know. No one knows. That's how you get out of it, though, if you want to. I mean, short Euro Swiss should be a good one to hold. Yeah, Euro Swiss is the trendiest trender of the world. Yeah, if you're in that short, brilliant. You are in short off of a double bottom bounce, though, don't forget. So possibly not brilliant. Don't know. It all depends what happens to this euro, which at the moment is just tormenting me. It's done. It's just look at what it's done today. I got that aggressive position in, yeah, and it's gone. You want a bit of profit? Nah, 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 nah. It's literally 3 hours I've been sitting there watching the P&L around this thing, and that's what I've been getting every bloody day. The high taken out, the high taken out, the high taken out, the drop. Well, hey, made one. The high taken out. It's just horrible, 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 not pulling back far enough, trendy thing. But we are going to get one of those ADR hits shortly, one day, today, Monday, Tuesday, I don't know. But today I'm going to make a decision on this, and I might take a loss. You know, and occasionally I have lost months, not very often, but sometimes you just get it wrong, and you got to take it. Let me guess, ADR vessel, yeah. Just closed out pound yen for 2% gain. Very nice. Who's that? The Armand. Well done. Very nice, yeah. That's the news. That's my Swiss yen $500 loss. Yeah, I mean, that was... see, that was fairly painful, wasn't it? It depends where you got in. I mean, the extension started there. Keep doing that. It's very annoying. Put it on the chart there. The extension started there. That's where you would have got your reversal alert, somewhere in there. So you've been sitting through that since 6th of September. So it's not too long. Week and a half, 2 weeks. Big payout. That was worrying, wasn't it? But also very comforting when you saw what it's done. That's the nicest signal in the world. That's the nicest shooting star I think I've ever seen. Look at that. For a shooting star. Everyone's going to say, no, it's a spinning top. Well, technically it is, but the wick is way longer on the top. Don't care what happened there. That was a new spike. Followed by a bearish engulfing. Off we go. Nice trade. And the pound's helped a lot over the last couple of days. Going to hold it for the next 2 months. Going for that 10 ADR short move. Sammy, go for it. You know, as I keep saying, everybody do your own thing. Do your own thing. Just follow the methodology. It really doesn't matter why you get in, when you get in. And I keep saying this. Use the indicators, don't use the indicators. Use whatever indicators you want. If you use the methodology, it will work. But the methodology has to be on a stretch of some... You need a condition indicator. Doesn't matter which one you use. The RSI I've found to be the best. For me, use stochastic, CCI, whatever. Just wait till it's extended. You don't even need this. Yeah. If you turn off the RSI... you know, you can do this as a little experiment on another chart. Is RSI extended? Yes or no on this 1 minute chart? Of course it is. Why? Because the thing dropped like a rock. You can see, you visualize it. You know it's extended. You don't need an indicator to tell. I don't need an indicator to tell me that RSI is extended. Probably down below 80, down there. Yeah, it's just, you don't need necessarily to use indicators to tell you. It didn't quite get to 80, but not far off. But is that a good time to get in on M5? Yes, of course it is. I have that kind of patience, yeah. Would you consider closing, say, your first 2 to 3 entries off of Euro New Zealand and keeping your higher entries to run? No. So what I will do, there's an argument for doing that. If you look at my P&L, you can't see it side by side because I've got so many positions on it. But if you look at the positions I've got on the hourly, so we can see them. Yeah, these two I've done drawdown control on already. These I haven't. So my first step is to do partial drawdown control on a few positions below the break-even line. And that has two effects. Basically, first thing is it takes a loss, but that loss is only half of these. So I'm taking a bit of loss or whatever. I don't know which positions they are, but it's taking a bit of loss. And then I look at what it's done to that. And every time I take anything off below this line moves up. So I see what the impact is. It's a visual thing when I'm doing drawdown control for me. When I'm doing a loss taking exercise in this case, it's a visual thing. So I'll take a bit of that off, and that off, half of it maybe, or I might take half of that and half of that and see where my break even goes. If my break even jumps up to here, because I've got an aggressive position on that is helping me, that is slightly in profit, say down here, for example, that's enough. I will then see what happens. If it does that, I will then start to take some off of this. I will only take partials off below the break-even line. I will leave all trades above the break-even line intact. Because these, if I take these off, the break-even line jumps down. I need it to jump up. I need price to help me get out of the problem. So if I take that whole thing off, I'm writing off a whole position. But I'm closing out only 0.13. By closing these three, I'm taking a little bit more loss, but I'm closing out 0.13 times 3? 0.39. So instead of closing out a 0.13, I'm closing out 0.39, and that has the added advantage of slowing my rate of drawdown if it goes against me. If I take a 0.13 off, I've still got 2.65 on, haven't I? If I take a 0.39 off, I've got a lot less lot sizing on. So as it goes against me, my drawdown increases at a slower rate. So closing the furthest position will mean you will have a faster rate of drawdown if the continuation pushes, if it continues to push and gets you into a bad position. Taking off more lot size is more beneficial because it slows the rate of drawdown. And as I'm expecting some kind of move, I'd rather slow the rate of drawdown, buy myself a couple of days to see if it happens. Whereas by doing this, if it does that, I'm going to be massively bigger on my drawdown, and I'm just going to want to close it all out faster. So it's better to, in my experience, to do partials and then see what happens. If I see it hit today's high, bounce, and then break that high again, I will then go another partial, and I might take a partial there. But I will always try and leave everything above the line intact, because the more ammunition you have above, the faster this line is going to come up. The more you take off below, the faster the line comes up. But you know, you will get to a point. There's a point, and 3% for me is I'm wrong. 5% is I'm wrong and I need to take action now, not wait. And this is what I'm doing. But usually by now I've had an aggressive drawdown control position or two that have played out. This thing's just not playing ball at the moment because the US dollar has flipped this inverse and it's just going. The US dollar is going to tire. And this, I think we will then get some weakness coming in the euro. But, you've got to look as well at other things. And, again, I keep coming back to this thing about there is no EA in the world that can do what I do, because it can't make a decision. It can't look at this and it can't read FOMC and it can't have a fundamental thinking of, God, this is probably not going to be amazing for the US dollar. In which case, what impact is that going to have on the euro next week? What's the Swiss franc impact going to have on the euro next week? What do I think they're going to do? It can't think that far ahead and make decisions based on which of these to do, because it doesn't know what's coming up in the news. And this is why it's impossible to teach drawdown control in any rule-based way, because some people out there will have got in there, and there. Their situation is way dire, way more dire than mine is. Other people will have got in one ADR apart, and they'll have two less positions there, and they'll be sitting in 3.4% going, I'll take my first aggressive position today. I started aggressive positions 2 days ago. Everybody's going to be in a different situation depending on what you've done. And then as you come out of these situations, this I've had many times in here, I've done a live room in the morning and I've sat here in 8% of drawdown. If you go back in the Telegram group, you'll find many of these posts. I'm sitting here in 8% of drawdown when I've posted my results for the evening. And then the next day, we come into the live room and I'm in 10% of drawdown. By the end of the day, I've banked 3.5% and I'm sitting in 1% of drawdown. This thing, all it takes is one ADR push, 2 aggressive positions on, my break even up to there, and I will bank $1,000 and have 2% drawdown and be comfortable in this position again. It's all it takes, one move. And look how fast that can happen. 4-hour candles. Well, these are 1-hour candles, yeah? Look, 1, 2, 3, 4 hours. Bang. Yeah. In 4 hours, we moved an ADR, just done 10 pips under an ADR. If we move 10 pips under an ADR from here, we're going to be down at these lows. Look how close I am to my break even. I'm 40 pips away. How easy is it to do 150 ADR push? How many times have we seen it in the last 2 weeks? 3, 4 times? It's not hard to get out of. You just got to be patient and have the confidence that the market will at some point do what you want it to do. But an EA cannot make that decision. I can't. I have to make this decision. As much as I could try and program some kind of super clever thing, you're the trader. You have to do this bit. It's the only bit you can't automate. And that's why the EA is sitting there getting me into all this mess. But I've asked it to. I want it to get me in because that's what I do. But I'm not asking it to get me out. And I'm not asking it to take profits for me either. I'm deciding where profits are going to be taken. And again, when you do EA back testing, you have to set a profit target. You have to set a TP. You have to set a basket TP. You have to tell it to take profit when you get to X ADR or get to X amount in profit. You have to give it this so that it can complete the testing for you. In the real world, if this thing goes like that, and like that, I'm not going to take it. The EA was probably told to get out here on that position and that position. But was it the right decision? No, because there's a human being watching this going, Jesus, why has that done that? Oh, Russia's just pulled out of Ukraine. How can it know? You're a human. You've got to do those bits. You just got to be, why did it drop for 3 hours? Because Ren said something. EA can't do that. And that, this is why I say and I keep bringing this up because it is very important. Everybody has a different comfort level. And I put that poll in, didn't I? What's the result of that poll? I never actually looked at it. How am I going to find that? I put the poll in because somebody asked, what are you comfortable with as drawdown? When that was not long ago, was it? Verbal diarrhea and Telegram group as well. Interesting to see what the result of that was. I didn't actually look at the result. I never do because it's when you post a poll, it disappears. There we go. There's a result of the poll. Very evenly spread. So, what is the total open drawdown you're willing to accept in your portfolio with this strategy? The vast majority of people are happy about 15%. Some people have got cast iron balls. 10% would be willing to go above 25. That's not me. That's the button I hit. And that's what I say I'm comfortable with, 10 to 15%. But I'm not comfortable there. I'm not comfortable there. But I'm not uncomfortable. And the only reason I'm not massively uncomfortable is because I've seen it play out so many times. And if you've been in here for a while, you've seen it play out so many times where this afternoon, that is 2. But you know, if you've got 10k in your account and it drops down to 8k, you haven't lost anything, have you? You're in 20% drawdown on your account, but you haven't lost anything. You're extended with a likelihood of a profit take happening. That's all you are. If you've stopped out on 20 positions and dropped your account to 8k, you've lost 2k. Sitting in drawdown is not a problem. It is your risk. And that's the biggest shift for most people, is moving from that being a bad thing to that being a good thing. Because I've got drawdown, it means I've got risk on, and I'm waiting for my positions to play. I'm waiting for the bank. Think of it like waiting for the postman to come with a check. Yeah? You've got a paycheck coming. It's going to arrive with $2,000 in it to help you pay your bills. But all the time you're waiting for this check, there's bills arriving each month. Your energy bill arrives, your credit card bill arrives, your car loan bill arrives, your mortgage bill arrives. All the other bills pile up. Then the check comes, clears those bills, and you reset. You wait for your next check next month. This is, we're waiting for the paycheck. These are our bills at the minute. We're just waiting for the paycheck to come. Problem is, nobody's got any patience. We've been bred to expect Amazon to deliver our orders this afternoon because I placed it this morning. So why isn't my profit not here today? I placed the order this morning for my short. Why has my short not happened? That's our mentality. That's not a good trading mentality, is it? But that's how we're programmed, and you can't unprogram it. So you just got to deal with it. You will get there. Everyone gets there. ADR, pound New Zealand. Got a potential double bottom at ADR here. We've got a very weak New Zealand and a very weak pound. So it's bouncing on this as well. Oops. I want to take that at ADR today. Where else is it ADR? I might take that off in a minute. I'm going to trail it. I can't trail it. It's got stupid spread on it, hasn't it? 10-point spread. I can't trade that. I can't trail that. I'm going to take that off ADR. I'm just going to watch this. So I'm just going to babysit this for a minute. I want that over there because I need to deal with this. So I want as much over here as I can in case I need to deal with this. So I'm going to bank that in a minute. I'm going to add it. I'll let the EA put that back on for me if we push up today and pull down. I still like the pound short, so I'm going to leave the EA running on this. But I'm going to watch this. I would normally trail this here. But because of the spread, if price moves up to here, which I'd be more than happy with, the spread would take me out. So I'm manually trailing this with my eyeballs at this level. Sorry. Here. Yeah. Basically, support, broke, turned into resistance, broke. So if we break back above here, I'm going to close it because the likelihood is we're going to do that market structure break. Obviously, M5, I'm looking at this on a much smaller, this is more like an M1 reversal alert. We just had it actually. But if we push down to here, obviously that's going to reset. So I will take off if we break above that level, and I will manually trail this down myself and get out at some point. I'll let you know when I'm out. I'm going to monitor this. And normally I would trail this if it had a tight stop on it, because when it gets back up to here, obviously, that's where I want to get out. But you can see how big the spread is on this thing. If it moves even halfway up, it's going to take me out. So I can't do it. You can't really trail New Zealand dollar. It's too wide. But I'll be getting out of that and sticking that over there as well. And it looks like Euro New Zealand's coming down nicely again. One, two, three, four. Symmetrical triangle break in a minute. Potentially. So we're contracting, ready to break. On my, so keep your eyes peeled on that as well. Right, that's all I've got for you today. I'll be back on Tuesday because it's the Queen's funeral on Monday and we're all shut. So I will be monitoring the situation in the markets on Monday. I suspect there's going to be very little trading going on. I don't know what time the funeral is, but there's people all over the world obviously taking time off. So I'm not sure how the US markets are going to be. I know the UK markets are going to be flat as a pancake because they're shut. And Asia will probably be as normal. So I'm going to monitor the situation on Monday. I won't be taking any positions on Monday or trading much on Monday, but obviously if the market moves in my favor, I'll be using it. Otherwise I will be out and just watching as I'm with this in a minute. So so yeah, I'll be back on Tuesday. I'll obviously be in the Telegram group all day today, and I'll be there for the weekend, and I'll be around on Monday. So if you need anything, let me know. Stick it in the Telegram group. But otherwise, I'll be back on Tuesday. Not looking to put any more risk on at the moment. I can't see any opportunities that I'm interested in at present. Next week, we're going to have a lot of movement, so there's going to be a lot more opportunities coming with news. But at the minute, I've got to deal with my friend, the Euro New Zealand, and that's what I'm concentrating on, and try and knock some money out of that. So, all right, have a good day. Be aware of the news this afternoon. University of Michigan at 3 o'clock, half an hour after market open. Other than that, there's nothing much else to do today apart from watch and see what happens. So we will see. We might have a lot of unravelling, as I say, because there's bank holidays on Monday. So we might have a lot of unravelling in positions this afternoon in New York. We've got some futures expiries as well. So options expiries. So might have a volatile afternoon. So it could be quite a good afternoon. We'll see. Okay, and yeah, have a good one. I'll be in the Telegram group if you need me. Otherwise, see you on Tuesday. Have a good one.